A sense of capital.
Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Live Earnings. Your host of today is Julian, and I'm very glad to have you in, guys. And yeah, today it's earnings day, guys. For those of you for sure who are invested, like me, into the Southeast Asian upcoming and great development company, Grab's Holdings. Grab, headquartered in Singapore. Guys, but before we jump in and getting more detailed about the company, a quick introduction about the company, and then covering today's Q4 2024 earnings results, full year earnings results. Just a quick disclaimer, as always, that in the upcoming minutes, this will not be financial advice, consultation whatsoever, and there is no guarantee for correctness of the provided data, guys. So make sure you do your own due diligence, your own research, and your own decisions, because at the end, it's your own money, and it's your own fault if you lose the money, or as well if you win it money, actually. Yeah. So yeah, make sure it's up to you what you're doing, guys. Yeah, honestly, I already slept 1.5 hours. Had a long business trip today, came back, did the power nap kind of, and almost missed the alarm clock of my smartphone, and yeah, just already went sleeping, walked here, something like this, like on an autopilot, and yeah, still happy that I somehow made it, honestly, guys. Um, but yeah, but let me check if the stream is actually working. That's important. Last time on was it last week or the week before? Yeah, I think last week Thursday, I had a kind of a delay. Let me check if that's the case. Yeah, it seems like there's still a delay, but I hope it's still acceptable for you. I need to work on another day on this kind of delay, and I can see that three viewers are already in. Highly appreciate this. So if I'm not mistaken and everything is on time, I hope the results of Grab, Southeast Asian mobility, delivery and financial service company, and a bit as well advertisement company out of Southeast Asia, will be live in roughly 7 minutes. I see what you're going on with him. Hi Zajic, 72. Nice to have you in again, first of all. Good evening or good morning, or have a nice lunchtime wherever you are located. Here in Germany, it's currently 11:43 p.m. On 19th February, so Wednesday. And I think in the US, or let's say Eastern time, it must be this 5:44 p.m. And just a quick one, because today we're not covering hymns, even though it's going crazy there. I likely cover it. Yes. Honestly, greetings to the USA. Born in the USA. Not sure if you're born in the USA, but at least greetings to the USA, collega. Yes, I need to figure it out if I will cover it or not. I mean, it's kind of a tradition, but honestly, I go for a business trip from Monday till Friday. It will. I have some meeting in the evening on Monday, and let's see if I can make it happen. But let's say like this: if on Saturday or Sunday I will set up the stream, then it will take place, and you will figure it out. And if not, then unfortunately, I'm not. I can't spend the time. Good evening as well, Lawn Mover Man, guys. Nice to see you, loyal guys, that you join one more time. That always almost brings me and pushes me to tears. Yeah, but I'm expecting that it's more likely I will cover it than not. Yeah, again, just because of tradition and just because I'm invested by myself, so I need to cover it anyhow, and then I can do it live as well. Just It's just a matter of if I'm available in this exact period or not. However, guys, again, topic of today is not Hims and Hers, it's Grab, and I think Grab is as well a very, very nice company. And again, I hope they will release the results in 5 minutes. Let's check out quickly together if that's already the case. For that, I will share the screen. Hope it's working. Let me see. Yeah, that looks good. That looks good. This is how it should be. And guys, can you please let me know in the chat if there's a delay? Again, I'm very sorry for it. I need to figure out why and how this happened. Maybe it's... Oh wait, I have it. Maybe I have it. Wait. One moment. Is it... Maybe I adjusted. I hope I'm not killing something it right now. Oh god. Okay. Let me see if it's now working. Oh no. Oh. I think I'm not... Nah. No. It's not the delay I'm working on, guys. I will stop doing it. But let me quickly check together what is going on with the results. If there's something already... Ooh, there's already something in Q4, guys. Q4. I will not waste too much time, guys. You see Grab, you see major income pillars, food or delivery business, mobility business, financial business, and some more businesses. Especially, I want to point out the advertisement business. So it's platform business, super app out of Southeast Asia, active in, oh god, no, I'm rushing, I relaxed too strongly. It's active in 8 countries, and that slide is not 100% up to date, but more than 500 cities actually. And yeah, so they're very dominant in their position, I need to tell. I just want to share before jumping in the results, and you know the procedure, guys, for those of you who are loyal and stick loyal to the stream. Here's my Excel sheet which I prepared. We have different kind of KPIs which we go through later on. It looks like a lot, is a bit, but not that much. I think very important ones, very interesting ones to see how the outcome is, the results, and how the impact on those numbers. If there's something completely surprising new, you never know with a company that large and that crazy developing like Grab. And what we see as well is here, please take a look and put your focus on earnings per share. So bottom line growth and revenue growth, expected one. I mean, you can see the forecast always here in blue, in light blue next to it. But my forecasts actually, I want to see earnings per share for US dollar cents per share. How or why? Because it's basically the same beat difference compared to the forecast like 1 year ago or to the quarter before 1 year ago. You can see the same difference here. And when we talk about revenue, so it's quite simple, but actually it worked a lot of times in the past. We can see the revenue, and I want to see a beat of roughly 19 million US dollars for this quarter. Why? Because again, 1 year ago they beat their outlook as well by 19 million US dollars. So let's see if they can make it happen. Here and there I check the chat, but it's on another window, another software, so I will check it here and there, quite non-regular, but of course feel free to leave some comments, and later on I definitely will back them and reply on them. Okay guys, but now it's time for take last zip. Clap the hands, getting a little bit more awake than I currently am. And yes, go back to the browser, check out what is going on with the results. Are they still there? And it looks good, they are still there. One more time, 4 cents per share earnings, but this is what we check out later. More important right now, revenue of 773 million. And of course, full year revenue, we want to see 2.77 billion US dollars. And adjusted EBITDA, maybe that's what I quickly check here and share. You can see here, this is what of course we want to see as well. I mean, have the big concerns in terms of the positive adjusted free cash flow. Just EBITDA as well, not as well on revenue, but you never know. They can always surprise, like every company. Business is business. Cool. Let's go back, and now it's getting serious. Q4 presentation, and we start with the presentation. Wait, maybe we make another window. Here we are. Okay. So again, 773 million revenues, what I like to see, at least. I personally, outlook, okay. Revenue, just in percentage, and you can already see here that, positive free cash flow, they will make it happen very likely, and you can already see on the first glance, 17% of non-constant currency, so the actual true result, and 15% based on adjusted constant currency, let's say it like this. So without any currency exchange rates differences, and 2%. So that's always sometimes a big impact on this kind of companies like Grab. And let's see what will be the outcome. Full year financial highlights, we can see it one more time, 2% difference, but 19% at least for me look good on the first glance, but we will figure it out in details in a moment. This as well, we go through it. I just want to quickly check out the numbers. And 764 million US dollars. Again, I wanted to see 773 million US dollars. So definitely by 1% a miss from my expectation, even though the outlook is a beat, because the outlook was 754 roughly. That was the market expectations. So just a small beat by a little bit more than 1%. Okay. But however, guys, now I think we should. There are a lot of nice details, and I'm hungry for entering them into the results sheet and compare them to the quarters before, and then we have the best transparency and the best insights about it. Good evening, wise man. Good evening. Greetings to Brazil, colega. Tomorrow new. We will join Brazil tomorrow. Today we go for Southeast Asia. In a moment, or let's say in a few minutes, I will let you know what at least is my opinion about it, if that's the right one, and then if it's good or bad, let's see. But at least in my opinion, I will share it right now in a moment. So we start basically adding the revenue of 764 million, and here we are at our sheet. Again, you can see here I want to see a higher number with 773, but it's still a beat. But the difference again between outlook and or forecast and the actual revenue is not that strong. Just 10 million. 1 year ago it was 19 million. So don't like to see that much. It's actually not sure if it's for me a miss or not, but I can already cover it actually with a rating, and I have the tendency to go for a neutral one. But look, guys, let's do it like this. I think I expect in general that somehow they will deliver, even though the revenue might be not that strong this quarter. And I need to be very strict with my rating as always, guys. That is a constant requirement to myself, which is important to, even though I like to, of course, grant better ratings from my perspective than less good ratings. But again, More important is to be somehow neutral. And if you are, when I stand between two sides, going rather to the more negative direction and rate it more negative than to the positive one. And here I'm right in front, in between of neutral and negative. Again, yes, they beat the forecast, but not that strong like 1 year ago. Okay, it's very difficult. It's very difficult, guys. Okay, I rate it neutral. I rate it neutral because I see really it's at least more than 1%. It's a beat in terms to a forecast. But I'm kind of disappointed. I would like to see more acceleration in terms of the overall revenue for this quarter. So it's a dark neutral. Yeah, for now I think that is the rating I want to give here. Okay, then let's check out what is going on with the earnings per share. So let's see if I can find it here, or is it is it like 11 million? I hope that's correctly. Must be. Wait. Operating profit should be 11 if I'm not mistaken. I enter it into the sheet. Okay, looks good. And do we see the number of shares as well, or do we need to open the press release? Let's see. Wait. Oh yeah, I guess we need to enter the press release. And diluted, we have 4, 2. I will enter it simultaneously. 4 everything. Is it 4? Yes, looks good. 42430. Okay, so guys, if I'm not mistaken, I think that should be correctly. One moment. Man, Grab developed quite well the past days and weeks, and of course then they need to deliver, and just in the first glance it doesn't look that great for me. That is what I can tell right now. Moment. Try to figure it out, the exact earnings per share number, because I'm not correctly if my calculation is that fine. But if not, I will wait just a moment till the official numbers are out, because my calculation is look, that is my result actually. Wait, I can show it to you in a moment. So guys, take care, but that is my result. So 0.26 earnings per share. I will use it right now and use it as my truth. I hope I'm right because the result makes somehow sense, but not 100% sure. So take care, you use the right number. We will check out in a moment, as soon as news are publicated, what is the final EPS. But if it's 3 US dollar cents per share, again, of course, compared to the forecast, it's a beat, not that strong what I would like to see. And actually here as well, I mean, Grab is for sure, from my perspective, in terms of valuation, not a cheap company. So I want to see performance. I want to see kind of surprises in this regards in top and bottom line growth. And yes, it's surprising somehow with a small beat, but not that heavy, not like, wow, every investor thinks, yes, that was a good investment, it was worth to wait for it, or yes, now it's time to invest more money because it's developing that great. However, again, it's not a disappointment. It's more or less, I think, a straight neutral. Yeah, I mean, again, I would love to see a higher number, but that's okay. I think it's okay if the numbers are correctly and they didn't disappoint it. So far, so good. Again, yeah. Not sure if that's enough for the valuation of the company, but I think it's more important to check out together now the details of the results and see what is behind the curtains. And therefore we go back to the presentation slide deck and we jump in a little bit more detailed into the revenue streams to just figuring out, okay, what is going on about those major three pillars of income. Here we got the revenue for deliveries, 407 million, 13% year on year. Again, constant currency, 10%, but we will take a focus on non-current, so not constant. So basically the true result at the end for us investors, because again, yes, they are active in 8 different countries with different kind of currencies, and they report in US dollars. That's the reason why there is this difference existing. So again, 407 million, entering those to the sheet. Okay, got it. Coming back and checking out what is going on with mobility. We have here for sure higher growth. Again, I mean, deliveries as well is affected by tourism, but I think not that strongly. It's more about local citizens and local population, people who are constantly living there. But I think mobility, it's as well, of course, utilized a lot by locals, but as well a lot by tourists. And as long as the touristic demand is growing, I think it has a strong and a huge impact as well on the mobility results. And you can see we're talking about 19% year-on-year growth. That looks great, especially because it's quite profitable business compared to deliveries. However, 282 million, we got it right here. Going back and entering it. And now we go to I mean, those both are the more legacy businesses. And now we take care of the financial ones. I mean, that's the big and strong and huge and impactful reason why I invested in Grab, because of the financial service. I mean, they have payment services, payment processing services, wallet services, this kind of stuff that you immediately pay the services for deliveries and mobilities through their application, but as well really the standalone classic digital banking services, loan, credit, deposits, this kind of stuff, credit cards as well. And this is what a blend out of this is what you can see here, and you can see how strong it's growing, 83% year on year. Let's see what was the past, what was the case. A loan portfolio is very important in this regard. We will check this out in a moment. However, 74 million is what we can see, and this is what we can enter right now. Okay, so we got the numbers here. You can see fat marked are the numbers which I take into account today and set the focus on in terms of rating. But of course, it's nice to see as well, okay, in which regard revenue developed great, and in which regard it developed, it hasn't developed that great. And so therefore we do it as every call. We try to exclude a bit the seasonality of the results. And I can already see here a lot of actions going on in the chat. I love to see this. And guys, again, I come back later on, and I'm sure you already can cover a bit questions to each other and have a great information exchange. I mean, that's a good fun or base here to do this in the chat function. Okay, let's check out the deliveries, and here we have the year-on-year growth of Q4 and Q3, and when we compare each other in terms of, again, deliveries, you can see last year 13.4, now 12.4 in mobilities, so it decreased a bit, but here, man, guys, that's where the music is playing. And again, as far as I know, mobility, we will see it in a moment, mobility is a bit more profitable, or way stronger profitable business than deliveries. So each dollar revenue here counts more than on the delivery side. And we can see that the revenue is accelerating comparing to last quarter. So 17% to 19%. And here, financial services, and that is what I love to see. I want to see that it's definitely the revenue is accelerating, the revenue growth. And you can see last quarter year-on-year growth was 33% and now 37%. That's excellent. I mean, there's no roof, there's no limit. If it would be 40%, I would not complain. But it's nice to see it's still accelerating. This is how it should be. And it's getting more and more serious, this financial services. So yes, now I'm satisfied with this neutral rating I granted. Actually, look, when I would need to give it detailed rating, I would rate it like this. This for sure green, and this one I think this for sure as well green. So now it has, in my perspective, a very neutral rating. I'm happy. I would love to see overall more revenue, than the 763 million US dollars. But when I take a look in the details behind the curtains, I'm personally satisfied. And that is nice to see top line growth. When we talk about a company which is defining itself on growth at the end, which is an aggressive company where market positioning and market share is very important, I think that's a good sign. And it seems like delivery, there's a lot of competition going on. We will later see in terms of incentives, so discounts and bonuses which get granted to the drivers and to the final the end users of the app. If the incentives level is very high on deliveries, I can imagine that's the case because of the strong competition, as well on mobility very likely, but even higher on deliveries. But we will see how competitive it is. I mean, at least we get an indication of it. But so far, let's say, so good. For me, neutral rating is basically tickle the box. And yes, it was the right decision to be invested. So not that strongly surprising, not really breakthrough quarter or whatsoever from my perspective, but at least good. Now we take a look on gross merchant value. Is it correctly? I'm not sure. I always need to check it. What is the abbreviation of it? We have it here. Gross merchandise value. So I mean, gross merchandise value is really the money which running through the app. What an end user is paying of the app is like a local citizen is really paying for the service, like $3 for let's say not $3. Let's say $30 for in case of the mobility, the ride, for instance. The ride job from A to B, the transfer, and revenue is really the piece which get cut out, gross, let's say the fee for Grab, let's say it like this. Okay, and we start with deliveries, and we're talking here about the gross merchandise value. And actually, again, gross merchandise is also GMV is for me more important than revenue. That's my personal perspective, because at the end, I mean, yes, you can as well adjust a bit the GMV, but more revenue, I mean, how much share you get out of each service, basically, you can adjust it very strongly. If you are more greedy, you increase the percentage, the share, and if you're less greedy, or less confident or whatsoever as a company, you can lower it. But gross merchandise value for me is the truth number, how strong the demand is of the market and how good the products are developing and getting accepted by the market. And yes, we're talking here about 3,213 million. So going back to the Excel sheet, 3,213 million, if I'm not mistaken. Okay, it looks good so far. And then we're going back and checking as well the same number in terms of mobility. And here, oh, that looks very strong. Look, I mean, revenue is 19%, yeah, but gross merchandise value is actually 23%. That is a strong one. And the same here. I mean, you can see GMV growing way stronger than revenue year on year. And here as well, 4% more than revenue. That is what I love to see. That is what I love to see, guys. That is what I love to see. I can tell. That's my personal opinion on the first glance. However, 1.815 billion US dollars. Going back. Let me check if that's the correct number one more time. Okay, it looks good. And this is stated as, you can check it out together as well, as on-demand GMV. Yeah? So they separated in non-on-demand and on-demand GMV. You can see it here. So 18.364 for the, is it full year? Yeah, full year, but we are on the quarter base. So to take care of 5 billion, roughly 5 billion for the full quarter. So if you read on demand, that's always the sum, the total of mobilities and delivery services. And what we do right now, we will take a look. I mean, first glance, it looks great for me, very strong actually. But we want to make sure on the second it looks great as well. So we again check out what is going on with the year-on-year growth. And going in, that's fire, guys. That's fire from my perspective. Again, always only my opinion. Make sure you do your own decisions and this kind of stuff. But you can see last quarter year-on-year growth was roughly 12%. Now we're talking about 19% in terms of delivery, in terms of mobility. Last quarter year-on-year growth 24%. Not the strongest jump compared to deliveries, but still a strong jump, 23%. I mean, it's not small business at the end, you know. So strong, great one. I mean, overall on-demand GMV 15% year-on-year growth last quarter to 20% this quarter. Easy move, easy judgment from my perspective. So for sure a positive rating. And again, yes, you can see revenue already taking a look behind the curtains, even though deliveries is not that no limit strong whatsoever, it's fine. But when we take now a look really on the GMV perspective, and again for me it's more important, that's definitely tickling the box from my perspective. Yeah, I didn't check out the price right now, the aftermarket price, since the market has closed. But I can imagine that's a positive one. That's a positive one so far. Okay, and now we check out what is going on with the take rate. And there is nothing we need to add. I mean, again, take rate is basically, not sure if you can see it, but the share based on the GMV and then resulting in revenue. Here again, I mean, I have a blend and it's weighted. Very complex calculation. No, but it's a weighted result. It's not like straight the mid between those both, but weighted with in mind the revenue, the size of revenue. So the result should be nice. And yeah, we can see here how aggressive they are. I mean, again, how big the chunk is they cut out of the GMV cake. Per order, per user, per service, basically. And let's check out what is going on here. And again, that is not like it's growing each quarter or something like this. That's sometimes traditional. Again, if you can see that the take rate is getting a bit lower, from my perspective, it means that they want to lower as well the cost for the users, basically not sure if it's getting more market share, if it's the reason to being more competitive. I think competitive a lot of times is a stronger reason, and prioritizing GMV, total overall growth, compared to getting more revenue out of it and getting more adjusted EBITDA with profit, for instance, out of it. And again, yes, they are, for them, market positioning is very important. I assume getting aggressive is not that bad at the end, I mean, it's a long-term investment, it's important. Everything, from my perspective, they are a bit like Amazon in the bit more early days, not the complete early days, but a bit more early days. And in this regard, it's important to protect the positioning of the different services, expanding to new sectors, making sure the growth is great in the markets. And on a certain point in time, they can push the button and getting more focused on profitability, for instance, increasing the GMV take rate. But however, now you can see, yes, it's better than Q2 this year, but it's worse than last quarter. It's worse than Q1 24. It's worse than a year ago. And so for me, that is, I rated red. Yeah, so I need to be strict here, and not the most crucial number. Again, for me, on-demand GMV is more important than this take rate, because again, that's something what you can adjust as the management and adapt to the situations. However, I would love to see that it's somehow growing in a more or less linear direction. Now we check out what is going on with the monthly transactional users. That is the MTUs, which is standing for this MTU. And again, only focused on demand, only focused on deliveries and mobility. So what we need to enter, obviously, is the number of on-demand GMV per group. Okay, let's start with the group MTUs, and we can see almost 43.9 million. It looks not that bad as well. And let's enter it. 49. Okay, and let's check out if I can find as well the on-demand MTU. Wait one moment. I check out with the last presentation. Wait, that's the same. I want to see where it was stated the quarter ago, the on-demand MTU. You can see here they stated it separately. Let's see if they have it here as well somewhere separately. Not sure why they reporting it a bit different. But yes, I can't see now the on-demand MTU like it was displayed in the past. Again, you can see group MTU and you can see on-demand MTU now. They put it in one number. Yeah, I don't like that the level of information transparency is getting down, even though it's just a small one, but it is how it is. Then, then let's cover the MTU instead. Let's make it like this happening. Maybe later on I find the number, but that's the case right now. Okay, And so we check out what is going on with the total group monthly transactional users. So really the users which are active, not just some inactive users. I like to see that they focusing just this number, not like some other companies. And you can see, wait, I mark this as well, Fred. You can see that actually it's the exact same growth. Like 1 quarter ago, year on year growth, same like 1 quarter ago. So 16.4, 16.4. I mean, nothing I can complain about if it's staying stable like this. I mean, you can see that the GMV, it's growing. You can see here at least the on-demand GMV is growing way stronger with 20.2%. So I assume that per user they're making more and more money on demand perspective wise. We'll check this out in a moment as well, I think. But in general, I think if they can keep this 16.4%, that's the fundament of everything. Yeah, I mean that the customers stay loyal, that this number is not getting down. I mean, yes, it might be for a short-term perspective nice to increase revenue, to increase GMV, but on the end, if the monthly transactional users number getting down, you don't want to see this. Yeah. That is the root of everything, to have satisfied customers, loyal customers, and the customer base is growing on a steady scale, and 16.4%. I'm satisfied with it. Again, I have mixed feelings about it, but positive ones, more like it's between neutral and positive. But I rate it right now as neutral. Yeah. So because it's not like increasing and accelerating, but I think with 16.4%, it's already on a high number. And again, you should not forget, they're adding services and more options to the different income pillars and product and service pillars. And therefore, I am happy with 16.4%, guys. Even though I would love to see a higher number, obviously, but that's fine. And on-demand GMV per on-demand MTU, regularly I calculate this, but I'm not sure if I've seen it correctly. I think they're actually stating it right now. Okay, they have now on-demand GMV per monthly transactional user. Year-on-year change is 1%. You can see, or $1. Okay. Yeah, okay. Wait, I'm not sure if I can utilize this. I would love actually to do this just on the on-demand perspective. Yeah, okay, that's tricky now. That's a bit tricky, but then I will calculate it. That's for sure tricky. I mean, yes, I can do it like this as well. Let me check if that's the correct number. That's looking good. On-demand GMV per monthly transactional user. But I get a different number than... Let me check out. Awkward. Look, because guys, they are stating $126 on-demand GMV per on-demand. Okay, wait. I mean, we do it on the classic way with this calculator, and that's the GMV, on-demand GMV, and that is the number. Not sure. What is wrong? What is wrong with this? Let's see if they somewhere share. No, they're sharing not here. The monthly transactional users. Okay, I get a different number. Awkward. Awkward. I'm not sure what let me see in the chat if someone is mentioning something. No. Okay. I mean, I will ignore this number, guys. I keep it as it is. I'm not sure what they're calculating there. I stick to my calculations. Again, it's my perspective, and I'm not sure how they result in 126 and 125 million US dollars 1 year ago, because you can see my calculation here, and it seems right for me. But yes, don't know what is the background of this, but we use the same calculation here, and you can see then we do it like this, and we put this for all the numbers, so we improve a bit, and okay, that are my results at the end. Again, take care. Not sure where I'm mistaking right now, but look, guys, when we compare it to last quarter year-on-year growth, it was actually not a growth. They decreased the number by 1.5%, so it was negative, and now it's up 3%. So love to see this, and actually then it looks positive. Yeah, and so I will keep it as it is right now, and it's re-accelerating, and it's the highest. You can see it here. If the calculation is correctly, it's the highest GMV, on-demand GMV per MTU in the past 2 years. So this is definitely something positive, and I rate positive. Keep it very simple. Now, so we covered the on-demand business with this with this 4 categories. You can see here, I mean, it's something between neutral and green already. The on-demand business neutral till green, and again, take rate is not that important. So with a tendency to green, to positive, and so far so good, I need to say. Yeah, so I'm happy with the results, and that's not always the case in terms of Grab, I need to say. There's a lot of volatility in terms of the rating from my perspective about the results, and this time it looks good, I think. So now we take focus on the financial services. We start with the loan dispersals. So how much liquidity they provided to their financial users and customers. Let's check out what is going on here. Going back, and we're going to this sheet. Oh, that's the loan portfolio. Let's see if they have loan dispersals. I hope. Guys, don't make me cry. Okay, they go for a loan portfolio, I assume. Let me check out if it's going here. Okay, so it's about loan portfolio. Okay, it is how it is. Then we will cover loan portfolio. And we can see here it's 536. This year, it's full year, it's okay. Yeah, obviously it's just the status. So enter this, 536. Adjusting that quickly. Guys, stay patient. And 1 year ago, it was 326. Man, I think in the preparation work of this call, but it's only 1 or 2 weeks ago or 3 weeks ago, I think I changed it from portfolio to the dispersals, because I had the feeling that the past 2 quarters they reported the dispersals, but now just the status with the portfolio. It's not that nice. I mean, that's my false decision basically. Oh wait, what's this one? But I quickly need to, honestly guys, add as well Q3. So we have the comparison and of the loan portfolio, 498. Wait, you can see it here in the back, 498. So these are the Q3 results of past quarter, basically. 498, let's add this. Okay, and a year ago it was 275. And we removed the other numbers, so not taking them into account, but not that important. I mostly focus, as you can see, the last quarter year on year and this quarter year on year, and let's check out what is going on here in this regard. And we can see that last year on year growth, last quarter year on year growth was 81%. Now it's roughly 64%. So it's getting deaccelerated a bit. Don't like to see this, honestly, guys. And here we have at the next boxes, we have loan portfolio per MTU, per monthly transactional user, and as well, it's kind of obvious, let's say it like this, but we can see as well a deacceleration. So I mean, yes, you can't grow, even though it's a new business you set and focus on, and you want to accelerate as a management. You can't grow stronger and stronger and stronger each year. And again, it's still growing 64% compared to 81%. But you can see it's deaccelerating, and again here might be the case that they're getting more strict with their loan dispersals to who they provide and under which circumstances money, basically. So doesn't need to be that bad, and you can see, yes, I mean, per MTU it's higher, overall it's higher, so it might be a decision, an own decision, and but the jump from 498 to 536 seems not that strong for me, honestly, guys. And yeah, as well, MTU wise, you can see how this was 1 year ago with 865 to 764, so roughly $1 more. Now we're talking about 30 US dollar cents more. And again, yes, the accelerating growth can take place, but for me it's a bit too quick, and I will rate both negative. Yeah, and again, for me, I would not invest into this company, very likely at least, if the financial services would not exist. So for me, it's a very important numbers, very important aspect about the business and the investment case of this company, and would love to see it stronger. Maybe I'm too strict and too critical in this regard, but yeah, it's simply not pushing me out from the chair in a positive way. Yeah, let's check out what about the bank deposits. What's the case? I mean, how strong the users demanding the services, and how strong as well they're trusting them. Because if you trust someone to use the accounts to deposit money there as a monthly transactional user, so as a user of the super app of Grab, and of the banking services as well, I think that's always a good sign. So let's check out what is going on here. Going back, hopefully this time I find the number, but I can imagine it's not the case, because is it Q3? It's Q3, but I can show you they had a separate chart, and they stated here the bank deposits, and I hope they're still doing it. Yeah, I mean, total deposits across GXS and GXS Bank. That's the number. That's good to see. So we have a number. Wait, was there loan dispersals as well? Year growth and loan dispersals by GXS Bank. Okay, you need to know that GXS is Singapore and GX is Malaysia. So these are the both full financial banking services which they have launched a bit more than 1 year ago. So not that old, but however we have the number 1.2 billion US dollars, and we will add and utilize this number. So entering it here, is it correctly? Looks good. Oh, looks better, I think. Okay, let's see what is going on with bank deposits and bank deposits per MTU. And yes, that looks more favorable for the company. Again, the growth was already very strong with 200%, more than 200%. We have now 221% in overall deposits. And when we take a look at deposits per monthly transactional user, it's increasing as well. The year-on-year growth, guys, keep it in mind. It's not an absolute number, it's a relative number, it's growth. And that makes me happy to see. Guys. So really demand is, that's important, that's fundament, that's trust from my perspective by the users. That's the fundament for doing great jobs and businesses and rolling out further credit cards, whatever services, loan services in the future. And of course, the deposits is money as well, which they can somehow utilize. So nice to see. Maybe here they're going a little bit off risk, yeah. So they're a little bit more careful who they grant money. But great to see that the bank deposits are nice. And so overall, when we take a look at the banking business, it's a neutral rating, and that is absolutely fine from my perspective. Yeah, that's absolutely fine. Now we take a look at the monthly active advisors. You need to know that I think till 2 quarters ago, they had 4 pillars. So they separated the GMV and the revenue and adjusted EBITDA in 4 different sections. So deliveries, mobility, financial services, and advertisement. And then they stopped it, and because this advertisement is basically resulting out of the other 3 major pillars, they separated and implemented or integrated it into the other 3 pillars. But in the past they talked about it separately, and what I would love to see or check out, if that's still the case. Here, because last quarter they didn't. Last quarter, it's always I prepare something, and then it's as soon as I enter it into my Excel sheet and I want to keep track on it, then somehow 1 quarter later it's adjusted. Yeah, a lot of times. Let's see if that's now the case here, but it looks that at least something is stated to it. Revenue for the full year grew 19%, constant currency base. That was attributed to robust on-demand GMV growth and advertisement from our financial segment, and you can see and advertisement business. So they're still separating, they're stating it somehow. Let's see if they give us some numbers for it as well. Okay, revenue grew for deliveries, re-acceleration growth and advertisement. Okay, maybe here. Advertising revenue as a proportion of deliveries GMV increased to 1%. You can see the focus is getting stronger on this advertisement. And I assume that now they do this for all the different income streams. You can see deliveries. And one more time. No. Just for deliveries, not for mobilities. That's unfortunate. Again, because they focused it in the past. But then I will keep it as this and Today, no rating about this. Today, no rating. But if we check out the details and we could now see, okay, deliveries, advertising, how it is developing, but I will not cut out this piece now and rate it actually. That is what I don't like to do. But I check it out by myself in silence tomorrow in the evening, and make my opinion about it. But now I will not consider it for the rating. However, what I will consider is the incentives. Again, these are the discounts which they grant to the merchants, to the drivers, to the users of the deliveries, mobility services, and as well financial services. And classically, from my perspective, if the level of incentives is high, and especially the growth is accelerating, then it seems like they are more aggressive in terms of granting the different kind of users better conditions, and they're getting more competitive. And if it's getting lower, then for me it's a sign that it's a little bit more relaxed in terms of competition and in terms of market share, and they can afford to lower less good conditions basically to the users, and still they will keep them basically as loyal customers. But we will see now what is going on in detail. And you can see we're already coming closer to the finish line of today's results, even though I will checking the slides a little bit more in detail in a moment. And check this kind of slide, for instance. However, let's get to the incentives. Oh God. So there we go. Partner consumer incentives, but we got it. That is where we need to be. Okay, total incentives. You can see that they separated in partner incentives again, like merchants, like restaurants, for instance, or like the drivers for the mobility services, and consumer incentives, which they grant. Here they motivate their let's say employees to getting better conditions and stay more loyal to them and love to work more for Grab, basically appreciate it more, and here consumers to increase the demand of their services. However, we're talking about in terms of deliveries of $363.3 million US. So you can see it's a bunch. That's quite a high number. 363.3, is it correct? 63, looks good. And now we check the mobility incentives, one row below. Here 145.2 million. 45.2. And now we check out the incentives for the financial service, which are traditionally a bit lower, with 4. You can see it's compared to the other ones quite minor in terms of the impact, but of course we need to consider it as well. Okay, and because they are that small, the financial services incentives compared to the other ones, I basically not considering them at all. Again, you can see it's just about a few hundred thousands, or let's say overall 4 million, but a few hundred thousands one quarter to another. So I'm just taking care of the incentives share. You can see of the on-demand GMV. That is my KPI, what I created for this dimension. And let's check out what is going on. And you can see that the total is growing, the absolute number, but as well the share by year-on-year growth. I mean, you can see 1.2%, and last quarter year-on-year growth 1%. And again, ideally it would decrease, but you need to consider as well. I mean, at the end, GMV is growing as well very, very strongly. Yeah, but yeah, it's considering already. I mean, it's already comparing incentives to on-demand GMV. So yeah, it's getting stronger and stronger. You can see like 1 quarter ago it decreased a bit. I mean, seasonality is an aspect as well. And again, it's at least not as high as 1 year ago. What was it? Q1, I assume. Yeah, Q1 2023 and Q2 2023. But it's accelerating a bit. Same actually like last quarter. Might be as well because of seasonality, like feast days and this kind of stuff. Then you have special offers. Yeah, but we're considering this basically. And so I don't like to see this. I rate it negative. Yeah, I would love to see it's getting lower and lower, honestly, guys. But on the other hand, we should not forget it's part of the business, I think. I think mobility is delivery, so this overall on-demand business will always be very competitive. The companies will use their elbows. There will always be new players in some markets of these 8 countries they are active in. In some services, they are active in those countries. And you will never have 100% share or just competitors which are very relaxed and say, okay, I'm fine with the revenue which I achieve. I will not grant incentives. So the competitors will grant good conditions as well to the partners, to the users. And so the same way Grab is doing it, and I think Grab can afford it. Yeah. So it's not straight negative that they offer this 10.1% of GMV as incentives. But again, still I want to see it's getting lower and they reach a certain plateau of confidence, yeah, and of reputation, of trust, of loyalty, and still they're working on this. They didn't reach that, yeah, and it's might be strategically right. I trust the management of the company, otherwise I would not be invested. But yes, straight for me, it's just not convincing me, yeah, and that's the reason why I rate it negative and color it red. Okay, let's check out what is going on about another KPI, or the last KPIs basically for today. And this is a little bit like shareholder value from my perspective. Yeah, so how focused they are on shareholder value, and I consider here the stock-based compensation. So let's see what is going on here, and if I'm not remembering it wrong, it should be somewhere like on the past base, your share-based compensation expenses, 49 million. Let's enter this. Is it correctly? Let me see. 49. Share the screen. Yes, looks good. Okay, and we can see here I set it as well in perspective, but this time not with GMV but with revenue. And I mean, on the first glance, not only on the first, honestly, not on even on the first glance, it looks really good. That looks good from my perspective. I mean, 49 million. Let me check out if that's correctly. It looks correctly. Share based. I'm quickly checking out in the document. Yeah, okay, it's the correct number. That looks good for me. I like to see this because I sometimes had the feeling that this share-based compensation level is very, very high. You can see like Q2 this year, 12.4% of the revenue, Q1 14.4%. As you can see, even you can see it here. 1 year ago, Q1 2023, it was almost 20% of the revenue was stock-based or share-based compensation. And so it decreased already last quarter. It's ongoing decreasing. And yes, the lowering is not that strong like year on year compared to last quarter, but it's still there. And that's fine. That's fine, I need to say in this regard. Because there will be always some stock-based compensation, and 6.4% looks for me. I mean, they will somehow reach a ceiling on a certain level, or of the floor in this case. Yeah, it will not be 0% of the revenue, and at some point in time in the future, never very likely. But this is something when I am a shareholder and maybe other potential investors look at it, they don't think, oh God, guys, what is going on? Yeah, and honestly, I have seen the risk that it's re-accelerating somehow because of some reasons. That's not the case. I think that takes some discipline, cost discipline, to work like this for the management, and it shows as well that it's not maximum greedy or whatsoever. Yes, revenue is growing, and therefore the overall stock-based compensation as well is heading into a certain direction, but again, it's overall getting lower, and that shows for me some shareholder orientation, some shareholder valuation and appreciation basically, and that is for me positive. 6.4%, I think it's not outstanding, large or something like this. It's a very good level from my perspective. And let's take a look on the cash flow, the money they can work with, the free cash flow actually, and the margin. And we talking about adjusted ones. And guys, I will check later out the chat. Don't worry, I love that you are that active. Is it this quarter? 61 million plus 60 million year on year, yeah, because it was almost negative 1 year ago, but that's nice to see. So let's getting back. 61 million, is it correctly? And let me check if we have a table here as well, which displays is a bit better. Okay, yes, numbers are right. I entered it. Ah, wait, here it is. You can see it here. Sorry, I missed to share the screen. But here is adjusted free cash flow, non-IFRS. So 1 year ago it was more or less neutral. Now they have 60 million more. And I assume they are very proud in it, and I think they can be. Yes, I mean, in terms of adjusted free cash flow, it was way stronger last quarter. It's a bit difficult, a bit tricky to compare those numbers to 1 year ago, because again, you can see they come out of a region which was very negative, yeah. And I mean, what they wanted to achieve is a positive adjusted free cash flow level for the full year, and it's 136. You can't see it, but I calculated it. Wait, we can do it together, like this. Past 4 quarters, 136 million US dollars. So that's for sure positive. And again, comparing it to last business year, 2023, it was for sure negative, guys. Yeah, and that's one of the reasons I think why investors getting more and more attractive, and Grab is experiencing kind of an attention on the investment market, because sometimes you think, okay, can this business be profitable? Yeah. And some investors want to see it, this kind of proof, want to see some kind of cash flow, want to see it's working into this kind of direction, and it seems like it's doing it. Yeah. However, Yeah, let's maybe check out the cash flow margin. It's a bit better to see this, and you look when you compare it to past quarter year-on-year growth. It was 20.1%. Now it's 8% margin roughly. Yeah, big reason is of course as well what was going on 1 year ago. In this case, it's not just about okay what they achieve right now, because again it was way worse. Yeah, okay, actually not. Margin was not that worse. Okay. Yeah, okay. Okay, look guys. I mean it was the margin was 5.4, then was 19%, and then was 8%. And as well we have roughly double the amount of adjusted free cash flow of 2 quarters ago. But you would love to see that they reach this level basically, yeah. And that's not the case, yeah. They can hold it somehow, the margin and the total number of adjusted free cash flow, the absolute number in the quarter, and that's not the case. And so I rate this negative. Yeah, maybe I'm too strict, and yeah, but I want to see it's heading to the positive direction completely. Best case, or keeping this level. I don't expect a huge improvement right now because 19.2% looks already very good, and especially when you consider the jump from this quarter to this quarter. Maybe here was a one-off effect, something like this. Not sure. One-time effect. Hard to consider, but yes, that's the reason why I rated on this level. Maybe we need to check out as well the guidance, of course. But first, we want to see what is going on with the revenue. And I mean, again, guidance-wise, it was stated 2.77 billion US dollars. And I think it was already raised during the ongoing 2024 business year. However, let's check out what is the truth here in terms of, financial results. I'm already in good shape, just going for the full year, and we have it here, 2.797 billion, so that's definitely a beat. 2.797. Not sure if you have seen it. Here it is. And going back, and I will add this number, let's say here, 7. Okay, let's compare this. It's a beat by 1%. Yeah, not a huge beat, let's say it like this, but again, it's a beat at least. It's a beat. Exactly 1% actually. Crazy. And let's check out what is going on with the adjusted EBITDA, if they could cover or have been able to cover. And it's 313 million, as you can see. And it's as well a tiny beat by less than 1%, but it's a beat. Yeah. Adjusted free cash flow, again, here we are, for sure positive. 136, we calculated already it before, I will enter it as well. And so all of this, yeah, it's not a huge beat, but let's say it like this, they cover it confidently. No misstep or something like this. And again, not something huge, surprising whatsoever. Again, it's already adjusted full year guidance. It was lower I think till last quarter and the quarter ago, I think even they adjusted it 2 times, at least in terms of profitability and just in terms of adjusted EBITDA. But that's nice to see. So guys, now we check a little bit more in detail the slides, not that long, but quickly run through this. I will quickly check out if I find the earnings per share. If I'm not, maybe I calculated it wrong, I just want to make sure it's correct. And I will of course react to your comments. And I give it a final rating, guys, actually, of course. Of course, that's part of the game as well. Okay, I mean, I can't find right now the earnings per share, so I assume my calculation is correctly. I need to. Okay, then we check out the slides in more detail. And of course, we check out the stock price. Honestly, I have already seen it. I can share it to you, but because I've seen it in a moment ago, and you can see it's down by almost 10%. Yeah. Honestly, I can't relate to this that heavily. It doesn't leave me speechless. It's 10% negative. Yes, depending on what you invested and how patient you are, if you're speculating just on the results, I mean, that's crazy to do it from my perspective, but okay. But if you're a long-term investor like me, or at least you try to be a little bit more invested than just a few weeks or something like this, I think it doesn't matter that heavily. And just this week, wait, I can see it a bit better. And when we take a look at the chart, just this week it went up like, yeah, roughly 10%. Yeah, so now it loses the gains they achieved just this week. Yeah, but still you can see the tendency is positive. Yeah, and it happens. Yeah, but I'm as well interested to see what is the opinion of the other investors and analysts, and what is the outcome of the call, of course. Yeah, that's important as well. But now let's head quickly to the slides, the presentation slide deck, and check out what is going on with information beside the numbers, even if we do not set that high focus on it. And then I will come to the overall rating, and then I check out and consider your comments. Financial operational highlights, saver transport rights. Yeah, you can see, I mean, the mobility service is developing really good from my perspective. And saver, you can see here what means saver. Yeah, I mean, this kind of option you have as well in deliveries as a consumer, as a MTU, and you can always go for a regular price, or you can go for a saver version of the price. Yeah. What is displayed here, and it seems like the customers are attracted to it, and that's an option they appreciate. And I think which gives them as well, it's not just saving straight money for them and maybe saving money compared to others, but at the end a benefit out of it for Grab as well is that the users which use the rides and which use as well maybe the deliveries, because again there's as well a saver function, they utilize the service, and later on, even though they spend money, they have the feeling, okay, I saved some money. You know, it has a kind of a positive impact on the overall emotions and the feeling what you have by utilizing the service, and that's great. Yeah, and you can see that in general they adopt to it. Now we take a look on the financials. So that was mobilities. They have another slide for financials here. Okay, it's nice to see they're getting more efficient with this 20 basic points. 64 year growth, loan portfolio across GrabFin and DigiBanks. Yeah, this is what we covered already. You can see here, I mean, we're talking about a super platform business. Again, you want to achieve this network effects, these synergies between the different services through this app, which getting accessed by the users and the partners and the consumers. And you can see the synergies are obviously existing. So they recruit their banking customers, at least in Malaysia with the GX Bank, through the Crab platform. So on the other hand, I mean, makes me wonder, okay, what is just one out of 10, so 10% of the new users or customers from financial banking services in Malaysia, they recruit them out of it. So is it a bit difficult without Crab support to get them, or is the marketing not working that great? Are people not adopting that crazy outside of this ecosystem? So it's as well a bit risk attached, but still, I mean, you want to see synergies, and I don't want to complain. I mean, I assume that the customer growth is very strong in this business, and still 10% of it is a good number, I assume, and that 9 of 10, that easily they grab it just simply that they have already a very good functional and healthy fundament of customers. That is great to see that this achievement is taking place. Okay, what we have here, financial and operational highlights. Okay, a lot focus on the banking as well. I mean, we are still in the financial district, I assume. Flex credit, you can see here the HUD of the application, and you have some kind of a flex credit, like I have it as well for my broker, for instance, to leverage something or to utilize it for other things. And yes, they're offering it. That's the message out of it. Superbank is Indonesia. You know, on the long term, even if it's not the case already, Indonesia will be the market in Southeast Asia, will be the market for Grab, basically. Strong competition with Goto, basically. Provider as well of quite similar services. Not sure if they offer as well financial service. Actually, I think not. Yeah, they don't think they have a full banking license, but not 100% sure about it. But driving and mobility services getting offered as well by Goto in Indonesia. However, you can see that the Superbank, it's active. I mean, again, GX Malaysia, GXS Singapore, Superbank Indonesia, and here are even the more higher hopes. Yes, on average, the Indonesian citizen is not that financially strong like a Singaporean one, for instance, or a Malaysian one, but the total number of population is crazy on another scale, and as well the growth, the economical growth, the growth in terms of salaries and this kind of stuff. So, and gross domestic volume or value. So nice to see, and yeah, they're offering some services here. Nice to see. Okay. Actually, not that much information. Outlook, guys. I already missed it. And first I thought, before I took now a look at it, I thought, okay, maybe that's the reason why the stock price is down, because of the revenue. But 19 till 22% year-on-year growth doesn't look that bad, actually. Yeah? I mean, how much they reached this year? And it was like... we need to check it out as well in the presentation. Full year revenue 19%. Yeah, you can see it here. In constant currency 21. And now they're talking about it's constant currency. See. Yeah, so comparing it with 21% this year, and now let's say the mid of it is 20.5%. It's it seems like they expect a lower year-on-year growth than last year on constant currency. And maybe that's something which getting not that highly appreciated. Again, I can assume that, or I can imagine that investors want to see accelerating and stronger growth, year-on-year growth, and that might be where it's not the case. On the other hand, it would not be the first time that Grab is adjusting the outlook and the guidance, the forecast, the expectations for the full year during the business year. So this is something what we need to keep in mind. And group adjusted EBITDA, let's see what was the year-on-year growth here. Oh, not mentioned. Yeah, it was negative. Okay, but okay, hard for me to judge about it. But let's say like this, 45% in the midpoint doesn't look that bad, honestly, guys. Yeah, but I can imagine that this is something in terms of revenue that might be something which investors don't like to see. And again, it's constant currency. So the actual revenue might surprise if the exchange rate, the currency exchange rate, is a little bit more favorable at the end of the year or during the year. But yes, I don't take it that negative. Yeah. So I rated this neutral. Wait, I will write it down here and say 2025. Okay, you can see it. Yes, looks good. 2025 full year guy. Oh wait, let's do it like this. Okay. And what did we have here as the midpoint? It's, oh god, that's not good. Free. Okay, do it like this. Three, four. A moment. Wait, maybe a zero is missing. Okay, that looks good. Let me check if that was the right number. Okay, and in terms adjusted EBITDA, I didn't see it. I will share it in a moment. The mid of this is 455. Yeah, 455. Going back, 55. Yeah, and they don't state something in terms of adjusted free cash flow. I'm not sure. Okay, good, but again, target was positive and they reached it. So we can basically remove this. Okay. And I mean, that's the full year guidance. Maybe here we cover this 2024. And we rated it neutral. And here, let's remove this rating. And we can see that, yeah, I mean, let's check this out. Okay, wait. We should not mix them. I mean, that's actual revenue and that's constant base revenue. We should not mix it. However, again, they stated something like 20.5% on the mid-range growth. And here something like, what was it, 41 to 50. So 45.5 if I'm not mistaken. And I can imagine that here again on the revenue side, that might be a downside, maybe something what I've missed. But for me, I keep it neutral. I mean, again, it's a more or less solid long-term investment for me, and I expect full year guidance adjustments do this kind of stuff. Yeah, they not always try to immediately set the perfect target for full year. So for me, I mean, it's not that valuable right now, even though guidance and outlook is, of course, always a very crucial aspect. But we will see how this will run out at the end of the year. Yeah, so in 1 year, make sure you join again, and then we can check if it happened or not, it became reality or not. But now coming to the full year rating, again, earnings per share revenue, if I calculated correctly, the 0.03 US dollar cents, then for me it's neutral. Revenue is neutral. The on-demand perspective here, these rows and these KPIs. And again, GMV take rate is not that important for me. MTU is very important for me. And of course, on-demand GMV, and we see here more or less neutral till positive tendency, and that's nice to see. We have here a neutral tendency in terms of the financial services, and yeah, adjusted free cash flow. Maybe that might be as well an aspect why the stock market is not convinced, because it just dropped. No matter if we talk about just free cash flow overall or the margin. But on the other hand, stock-based compensation looks quite positive for me. But yes, I would love to see, I mean, out of this, we can see it's more like neutral to negative. So all of this, again, neutral positive, neutral negative. So I see this, the details are neutral, the revenue and earnings per share is for me neutral rated. The full year guidance, what they have achieved, is neutral. The full year guidance 2025 for me is neutral. And so, I mean, overall, I put my neutral stamp on it and mark it yellow. That's my final statement about the rating. And now let's check out what is going on with the comment section, guys. And let me quickly go through it. We are finding numbers. Palantir crashing as we speak. Okay. Yeah, I'm not too deep into Palantir, honestly, guys. But congrats to those who make big profit by it. I mean, staying loyal to a company that long, even though numbers, the valuation is rising all the time on a very high scale. Yeah, it's difficult. Down 6%. Where are the numbers bad? And want to call it 7 help or no? The company had the same profit as previous period. Strange, since the final profit of 10 million is the same. Why is stock go down? I think because people were excited. So Wiseman is telling why is the stock going down, and he's answering Wiseman. I think because people were excited about the rapid advance, it didn't hold up because they were optimistic. The stock's actually not worth $5, so it could go down even further. We have considered something absurd. The company does not earn in dollars. They convert the value of local currencies. Yes. So that is the reason why they always state those non-currency, constant currency results. Grab is gambler stock. Gamblers never win long term. Is Moonhead stating Booga Mooga 23 is stating what the fuck this guy going on about. I only put $90 in call options is mentioned by the money man. Yeah. Hey guys, look again. It's your decision if you want to invest something or not, and it's of course your own free will and your opinion what you can leave on, for instance, those results. Again, I try to share my perspective, and when you take a look at it, it's for me not. It's my personal opinion. It's not that clear negative. Yeah. Honestly, not at all, from my perspective. Again, I can imagine that the big aspect is the free cash flow margin and the free cash flow. But everything else for me looks more or less roughly in line. Not everything perfect, yes, but quite good. And it is something, I mean, for me, it's kind of, even if I don't like to say it, but it's kind of a core investment. I mean, I'm invested in 5 stocks. Sharing here my portfolio. Wait, guys. And I mean, now even Himson-Hurst is a larger chunk with, I think, 65% of my portfolio. But still, Grab is something the same like new, which I can imagine to be invested in 5 years, in 10 years, in 20 years even, yeah? Or even my children, which I don't have at the moment, but if I might have some in the future, they will receive those shares when I die, for instance, yeah? So, or I give them as a gift, as a present. And so for me, it's Grab and New is really a kind of a larger, slower, but constant moving locomotive in the right direction, with strong, constant will and power. And for me, their 1 quarter results doesn't count that much, like for instance on SentinelOne or on Alphen last week, yeah, which was a very crucial results, or upcoming Monday, guys, Himson-Hurst, yeah, it would be a banger. No, not sure in which direction, but there's a lot of action going on, and each quarter counts that much. For me, that's not the case in terms of Grab and that of New. Yeah, that's my honest opinion, and still I'm very satisfied with this results. I need to say, not let's say very is too much, but I'm satisfied. I'm fine with it. It's for me neutral rated and okay. Yes, I would as well be more satisfied if it's somehow a positive surprise, but neutral is absolutely fine. And guys, just a quick glance on the pipeline of the upcoming streams. You can see, I mean, we covered last week Alphen, we covered now Grab, and tomorrow we will go on with New in the evening. I think it's something like, what is it? Roughly 10 p.m. Central European time, or roughly 4 p.m. Eastern time. So after, before market opening, basically. No, after market closing. Sorry. after the closing bell has ringed. Let's say it like this, and then we will go on with the final ones, which is SentinelOne on very likely 12th of March, even if the official date has been announced. And Gambling.com Group, they already today announced preliminary results, which have been not that strong actually. I think they missed earnings per share, or they will very likely miss earnings per share, and just beat revenue very on a tiny level. But still, I'm very convinced into the stock, and didn't talk much about this right now. So make sure you join the stream as well at the 3rd week of March, 21st of March. And guys, that's it for today. Thank you very much for joining. I mean, if you appreciated what you have seen, feel free to leave a like to the video and subscribe to the YouTube channel. And as well, you can follow me on my other social media accounts like Twitter and Instagram here as well. A Sense of Capital, that's my name. And yes, I hope you enjoyed what you have seen. Even though we covered a lot of numbers and talked about different details, even if you might be not that satisfied with the results. Again, I am, but one more time, it's always up to you to make your own financial assessment and decisions. It's your responsibility and your risk and your chances at the end. Yeah, and hope you are sharing my opinion that you are satisfied as an investor, or you are not satisfied with the results somehow, and you are short on the stock. Then it's good as well, I assume. But however, very thankful for joining, and most important is at the end health, guys. So take care of yourself, stay healthy, and yeah, if everything goes right, hopefully we will see and meet each other tomorrow at the new earnings session. Yeah.
A sense of capital.